Most of us have likely encountered or gotten involved in discussions about diversifying assets, investing, foreign stock exchanges, and other related strategies for wealth building, especially on this channel. However, we oftentimes fail to ask a fundamental question. How do these wealth building strategies intertwine with the underlying dynamics that shape today's economic landscape? Welcome to today's episode of Fun Financial Insight, a channel where we untangle the entangled concept of money matters. Today, we will be exploring insights as regards to today's economic landscape from prominent investor and author Ray Dalio. Let's dive into the six senses Ray Dalio offers as regards to big things that can cause financial decline that can be a result of previous lifetimes. As we move forward, the year 2025, the global economic future seems more obscure. This has been due to several causes, including political strife, environmental problems, as well as technological disturbances, among others, a combination of which can change our ideas of the future. Ray Dalio, who is also known for being the founder of Bridgewater Associates, has warned about possible financial instability that is expected to occur soon. These multiple challenges call for more than ever before insightful analysis and strategic foresight in maneuvering through the intricacies of modern-day economy. Imagine the past as an archive of lessons waiting to be discovered. Ray Dalio, a guru in finance, takes us through time, extracting wisdom nuggets from important moments such as Nixon's decision in 1971 and Roosevelt's actions in 1933. Now, see Nixon sitting right there in the Oval Office making some groundbreaking announcement that would change the world forever. He is about to sever the link between US dollars and gold. It sounds like it was a major development, doesn't it? You bet. Its effects were felt all over the globe, especially in Europe, where many countries are still struggling to recover from this move even today. This action was expected to cause a financial crisis and hence reduce the economy, but it did not happen. That was one of the best political decisions ever by Nixon at the time, as it focused on job creation, brought inflation down, and stimulated the stability of the exchange rate. Consequently, the government got more power through monetary policy, which depends less on commodities than flat currencies anyway. Dalio says that comprehending such unexpectedness can help unravel the economic challenges that are confronting us currently. Let's jump back to the 1930s. Roosevelt steps onto the scene with a strategy to address the Great Depression. His actions, such as introducing policies and programs, made an impact on the economy. Dalio reminds us that the history is more than books sitting on the shelf. It serves as a guide for navigating financial crises. Why is all of this important? Dalio emphasizes that by examining cycles like the ebb and flow of debt level shifts in productivity over time and decisions taken by banks, we can better equip ourselves for what lies ahead in the economic landscape. Think of it this way. Picture yourself driving a car and spotting a road sign warning of a bend up ahead. You slow down. You adjust your steering accordingly, don't you? Similarly, understanding past patterns helps us predict and navigate through the ups and downs of terrain. In essence, Dalio's point is straightforward. History isn't something found in textbooks. It's a roadmap for comprehending the moment and getting ready for what's to come. So let's embrace the lessons from yesterday to pave the way for prosperity in the future. Looking at history just helps us better understand what is happening in the world. Ray Dalio identified 5 key current economic trends shaping our economy's landscape. First, let's talk about the growth of debt financing. Imagine a huge snowball rolling down a mountain, growing thicker and thicker. Dalio tells us that in today's world, countries and companies are borrowing more than ever. A process that's changing how the economy works. It's like a game of Jenga. One wrong move and the whole tower could come tumbling down. Internal socio-political economic conflict. Think of this as a tug of war between different groups in society. such as trade unions and big businesses, or political parties with opposing views. These conflicts create uncertainty and can affect everything from government policies to the stock market. The rise of China as a global power. China is like a giant dragon awakened from the slumber of centuries. Rapid economic growth and growing influences in the world are reshaping trade relations and global power dynamics. Effects of natural activity and natural conflicts on money and empires. Consider how things like droughts, floods, epidemics, and wars can disrupt economies and change the balance of power between nations, as in the Ukrainian-Russian war. Man's capacity to adapt and innovate. Humans are problem solvers. We adapt. We innovate. Our capacity to find creative solutions drives economic progress and resilience. This ability is a powerful force. Dalio reveals key trends: debt monetization, global conflicts, China's rise. These shape the ocean of global finances like currents. By understanding them, we navigate the waves of change ahead. Now that we've explored some amazing insights shedding light on Ray Dalio, let's keep the conversation going. Be sure to leave a comment in the comment section below and let us know what you're learning most from this video. And as always, like and subscribe to find more videos on fun financial insights. We appreciate your support, which keeps us producing valuable content. Everything is always changing in this world. There is a paradigm shift. The mentalities that did exist, such as we don't need to worry about inflation, cash is a safe place, and so on, getting a punch in the face. Industries that had a lot of traffic due to the trust people had in them are experiencing ups and downs, twists and turns. Sometimes it seems as if everything is being turned upside down, and the question is, can we go past 2025? Dalio believes that regardless of these hits or punches, we can solve all these puzzles. We are great at solving puzzles, even with difficult political situations, unstable economies, or uncertain global developments. But how do we do it? As said by Ray Dalio, an important part of this skill lies in our ability to be innovative. Consider all the incredible things that have been invented throughout these years, including iPhones to self-driving cars. They not only make life easier for us, but they also provide new prospects for national development in general. Dalio doesn't just discuss gadgets and gizmos. His words explore how we adapt as societies too. We constantly develop new collaboration methods, communication channels, and problem-solving approaches. It's like upgrading our operating system, staying ahead. Dalio's message: we can overcome any challenge by embracing innovation, remaining flexible, and working together. Ray Dalio offers valuable insights for navigating investment strategies, financial complexities. The fact that he's shown the light on diversification shows how one hedges in investments by maneuvering their money across a spectrum of resources to get the highest returns while minimizing risk exposure. Investments have been regarded as an accurate distribution of cash and government savings bonds, which tend to be stable. Nevertheless, Dalio raises a warning to not treat government bonds and gold as major assets in case of deflationary pressure and geopolitical risks. In a difficult economic time like presently, the old fortresses of harboring value and routine in the face of dilemma and sudden changes like fluctuation of the market can no longer be source of stability. Dalio does not promote investing only in assets, but rather suggests the adoption of a balanced approach that considers investments that can withstand inflation and commodities. Sometimes hard assets like precious metals, agricultural products, and so forth have been always utilized as hedges against inflation, which can serve as means of storing value when the currency is depreciated. On the other side, public investment in the sectors that are less exposed to inflation pressures, such as infrastructure and real estate, may provide a stable environment when the rest of the world is uncertain. Factors such as geopolitical tensions, trade disputes, and political instability can create a turbulence in global markets by changing dramatically the price of assets and investors' sentiment literally overnight. When differentiating between traditional financial metrics and unconventional financial resources, investors can use a combination of these to best prepare themselves for volatility as well as a chance to cash in on the new trends. Dalio moves on to exploring risk zones and politics as factors that might trigger the degradation of economies with unstable environments. According to him, we are going to witness growth in populism and political radicalization in the near future. The rise of a sentiment which is strikingly similar to the fever people experience when their beloved sports team is about to lose. The passion of fans creates a lot of heat. Equally, in cases of economic recession, the population may lean to extreme solutions such as racism. On the other hand, Dalio reveals a watchful warning against the hasty passions that can lead to irrationality. The vital nature of the policymakers to ensure a stable state of the economy is the concept that he stipulates. Advocating against conformity, he instead emphasizes the need for decisive risk mitigation procedures to proactively address vulnerabilities of the system. If we must make it past 2025, there are certain things we need to put in place. Ray Dalio made mention of as a few. Diversified portfolio strategy. As per his advice, Dalio recommends that a person should include an array of assets in their investment portfolio. Losses can be reduced by doing this strategy, which helps to decrease the chance of any specific assets getting affected. Inflation-resistant investments. According to Dalio, one must include investments that are insulated from fluctuations in inflation in one's portfolio. Examples could be commodities and other assets which can be seen to hold their value during the times of inflation. Consideration of geopolitical risks. Dalio believes that neglecting geopolitical risk can be detrimental if one is to design an investment strategy. By taking into account the uncertainties involved in financial markets, investors will be able to invest more successfully in volatile markets. Balanced approach. Unlike focusing on conventional assets such as money and bonds, you want to be flexible in your approach by including various asset classes in your portfolio, such as gold. It's a dead asset and can be very good insurance policy. With this balanced style, investors will be able to effectively handle risk and explore possibilities under different circumstances like bull and bear markets. Recognize that the future is built not only on the extrapolations of forces we expect will happen, but also those we cannot. Being knowledgeable, diversified, and proactive allows us not only to prepare for tough times since we have some reserve, but also to take advantage of market opportunities when they occur. And lastly, don't forget to like, subscribe, and definitely hit that bell icon so that you can receive all the finance-related topics that we produce. Well, I hope you enjoyed and learned a lot today through this journey. Keep on exploring and educating yourself, and see you next time.